going on, everybody? Welcome back to InvestQ and another video today. This time we're covering again BigBear.ai, and we've covered BigBear.ai numerous times. And today, after everything we've discussed regarding Q2 earnings, the revenue growth improvement, improving gross margins, backlog, government contracts, yada yada yada, the list goes on of everything we've talked about. I'm also wanted to shift gears a little bit and focus on something that just something a little bit different, and that's regarding institutional ownership in BigBear.ai and how it's continued to climb. And according to the latest data being reported by none other than Fintel, we're seeing names that you would expect, such as Vanguard, BlackRock, Morgan Stanley, UBS, and numerous other institutions that are maintaining or increasing exposure to BigBear.ai. So I just want to do my best, just do my very best today to answer a simple question. And that question is, what exactly are institutions doing with BigBear.ai? And more importantly, does this change anything about the bull versus bear debate surrounding the company? And as always, none of this is financial advice. Institutional ownership by itself is never a reason to buy a stock, so please do your own due diligence and do your own research whenever you are looking to buy any stocks. And BigBear.ai, shout out to Prophecy AI, Claude, specifically the software running the analysis. Currently, they're trading the day at $3.34, and Claude has a 1-year bullish projection of $3.52. Now, going back to what I said for the company, Fintel, when looking at BigBear.ai, it currently has approximately 497 institutional owners. And of those 497 total owners, 478 are reported as long only, while only a relatively small number are classified differently. And Fintel reports approximately 259 million institutional shares held long, which represents roughly 54% based on the share count methodology displayed on the site. And the estimated value of those long institutional positions is approximately $901 million. But what's arguably more interesting isn't simply where institutional ownership stands today. It's the direction that it has been moving, because when we look at the chart, institutional ownership was dramatically lower several years ago. And then beginning around 2024, and especially throughout 2025 and into 2026, we saw institutional ownership accelerate substantially. So regardless of what anyone thinks about BigBear.ai's current valuation or their fundamentals, institutional participation in this company has clearly changed. Now, we can go even deeper, because Fintel's institutional activity summary currently shows approximately 284 buyers versus 124 sellers. And another 83 were classified as unchanged, and the reported net change was approximately 16.4 million shares. Now, this is where I need to make an extremely important distinction, because this does not mean that 284 institutions suddenly decided BigBear.ai is undervalued and they aggressively bought the stock yesterday. 13 F filings are delayed, and some of these positions can also come from passive index funds. And they also can come from quantitative strategies, hedging activity, or other portfolio management decisions. So don't look at this alone and just say BlackRock owns BigBear.ai, therefore BlackRock thinks that BigBear.ai is going to be going to $20. That's not how institutional ownership works. But what we can say is that overall institutional footprint surrounding BigBear.ai has expanded, and some of the individual moves are huge. Now, I want to take a second and scroll down and look at some of the individual filings. Now, according to the 13 DG filings that are displayed here, it shows displayed by Fintel, BlackRock reported an approximately 39.2 million shares compared with roughly 19 million previously displayed. And we see that that's an increase of roughly 96.8%. And Fintel shows that that position represents roughly 8.2% ownership. While if we look at Vanguard, it reported at approximately 20.8 million shares in another filing. And when we move through the latest 13F filings, we see numerous recognizable institutions, and there are numerous smaller institutions increasing positions by double-digit and sometimes triple-digit percentages. And again, I don't want to exaggerate what this means. This isn't a situation where BigBear.ai is exclusively being traded by retail investors anymore. That obviously is true, but a question that you should be asking is, why would institutions want exposure? So why are institutions increasingly willing to have exposure to BigBear.ai when we've spent plenty of time discussing the problems that this company has? And I think the answer becomes clearer when we go back to the Q2 report, because again, the bull case still exists. BigBear.ai, they generated approximately $36.7 million in Q2 revenue, representing roughly 13% year-over-year growth. And again, those gross margins continue to improve, and Q2 is at 32.8%. And the company, again, record backlog at $269.6 million. And management reaffirmed full-year guidance for that revenue run rate that they expect to have between the numbers of $135 and $165 million. And BigBear.ai continues building its position within government, defense, national security, biometrics, and AI-driven decision intelligence. And we've also talked about the company's contract activity. There have been more than 20 new contract wins discussed, alongside more than 60 million in recent national security specific contracts. And then you also have technology and opportunities that we've discussed before, such as Conductor OS, Ask Sage, CargoSeer, the company's trade and travel business, the Dutch aviation security opportunity, and BigBear.ai's broader relationships throughout the US government and defense ecosystem. And those opportunities give investors a legitimate long-term growth thesis. But again, you have to realize that even though that we're seeing increases and we're seeing good things from Fintel regarding institutional ownership, that doesn't necessarily mean that erases the bear case, because BigBear.ai reported approximately a $25.7 million net loss during Q2, and adjusted EBITDA was approximately negative $11.6 million. And the company continues to burn through cash, and dilution remains one of the biggest concerns surrounding the stock. And we've talked numerous times, we've talked extensively about how BigBear.ai's share count has expanded. And that means even if the overall company becomes more valuable, existing shareholders have to consider how much of that company each individual share actually represents. And the company still needs to prove that these contract wins and backlog can translate into the sustained organic revenue growth and eventually profitability. That's why I don't look at institutional ownership as something that invalidates the bear case. And looking at another interesting piece of the information here is that Fintel reported institutional options exposure shows 26 institutional call holders and 26 institutional put holders. Quick reminder before we continue, if you're enjoying the content and want to connect with the community, check out the first link below for the free InvestQ community. And if you want access to advanced stock research and tools, the second link is a Prophecy 7-day trial for just $7. And last, if you want daily market updates and behind the scenes content, follow me on Instagram using the third link in the description. Now, let's get back to the video. Again, I would be extremely careful about the way you would interpret this, because institutional options positions can be hedges against common stock positions and of much more complicated strategies. And a put position, it doesn't automatically mean an institution thinks that BigBear.ai is going down, and a call position doesn't mean that the same thing vice versa, that they instantly think that the company is going to be going up. But what it does reinforce is that the institutional involvement surrounding the stock is becoming more sophisticated than simply institutions buying common shares. Now, when I put everything together, I don't think that the takeaway should be institutions are buying BigBear.ai, therefore BigBear.ai is going higher. That's too simplistic. My personal takeaway is that BigBear.ai is increasingly becoming an institutionally relevant company. And that's different because several years ago, BigBear.ai was relatively obscure speculative AI and government contractor. And today, we're looking at hundreds of institutional owners and some of the largest asset managers in the world appearing throughout the ownership data. Meanwhile, the actual business is trying to evolve as well. You're seeing that the revenue is growing, margins are improving, backlog remains substantial, and government and national security opportunities remain significant. But the thing is, profitability still hasn't arrived, cash burn remains something investors need to monitor, and dilution remains one of the biggest risks to common shareholders. So, again, there's legitimate concerns from the bear case, and the bull case also does have legitimate points as well. So, for me, again, as I mentioned, institutional ownership doesn't change how I feel about BigBear.ai or the company. But let me know what you think about BigBear.ai and what it is you're looking for regarding this company in the upcoming quarters. So, with that being said, let me know what you want to see in the comment section below. Let me know what you think about this company. And again, David over here at InvestQ out, and I'll see you on the next video.